China's central bank has announced it will cut the reserve requirement ratio by 0.5% starting on September the 16th, releasing approximately 900 billion yuan. The move is aimed at lowering the actual cost of financing and designed to support development of the real economy. So how will the move add vitality to the slowing economy? What effect will it have on the financial risks faced by China? And how does China plan to keep its annual growth rate above the 6% mark? To discuss these issues more, I'm happy to be joined in the Beijing studio by Professor Jiang Gong from the University of International Business and Economics and Charles Liu, founder of How Capital. We shall also speak to Stephen King, Honorary Professor at the Institute for Strategy, Resilience and Security of University College, London. He's in Amsterdam. That's our topic. This is Dialogue. I'm Yang Rui. So are you surprised, Charles, by the latest announcement of the PBOC?
Not at all. We already had a couple cuts in the reserve ratio this year. And given the slowing down of the global economy, it's not just China, but the external environment is rather negative right now. It's necessary to increase some stimulus. And in fact, from the ground, I've noticed a lot of enterprises seeking financing and are having serious difficulties getting financing.
And do you think this requirement ratio stuff aims to save a lot of small and medium-sized enterprises of the real economy? And do you think this measure is going to work? John.
Well, it definitely will help. I mean, I think what you said is exactly right, because the reserve requirement reduction is different for some banks. Actually, for some, what we call in China called city commercial banks, the the decrease is actually even more. So that's importantly targeting the small and medium-sized businesses. So I think with this reserve requirement reduction, the number of loans that can be made is going to increase, and the amount of loans that can be made will be increased. So it would help with the small and medium-sized business for sure. Hopefully, it will alleviate the pressure.
But I'm afraid at this moment, the sagging confidence of all major players, be they public or individual, characterizes the current underperformance of the Chinese economy. And therefore, what do you think of the issue of, the chronic issue of poor credibility of the private economy? Policy banks could probably do something, but financial state-run banks may still find it very difficult to provide SMEs with the loans. So that's, have long been in our discussion, and there's no remarkable progress whatsoever.
There's no remarkable progress, but various attempts are being made to improve the situation. For example, what happened in the Greater Bay Area, the trial of supply chain financing through blockchain, which is what a central bank is trying to do now, to increase the availability to supply chain financing to small and medium-sized enterprises. And that's actually working. Now, I think in addition to additional credit, lowering of the interest rate is another one. It's just important that banks don't take this money and then give it to financial institutions for real estate and stock market speculation. That is a risk.
John, what do you think of, say, the reserve requirement ratio being cut by the PBOC, and will it undermine the so-called prudent monetary policy?
No, I don't think so. I think this is precisely the kind of things that the central bank is supposed to do during economic downturn. The downside, of course, is inflationary pressure. But I think at this point, other than maybe the price increase, the price run-up of the pork, fueled by the swine disease, African swine disease, I think the pressure on inflation is still quite moderate right now. So the world commodity prices, I think, are still within a reasonable range, and so I think there will be less concern on causing too much inflationary pressure, and sort of a little bit relax on the monetary policy will provide hopefully adequate stimulus to the economy, especially to the medium and small-sized businesses.
The issue of debts is very interesting, Charles, isn't it? For example, what do you think of the debt ratio of local governments? Some put it at 70% of the GDP total. Others say it's lower below the international standard. But do you share the same note of cautious optimism?
Well, I think China really has to be broken up into different regions. And the situation of different regions are very, very different. I don't think Shenzhen has any problem with local government debt.
No, it's deep pocket.
That's a very, very deep pocket.
Deep pocket, yeah.
Yeah, and the same thing for Zhejiang province, Jiangsu province, and so on and so forth. But the Northeast has some serious issues. So I think one has to address these issues in being location specific. And it's really, really very different. Because, for example, Shenzhen is now providing additional stimulus and policy support for high-tech companies.
You have just come back from the Great Bay Area.
Yes.
And you visited Shenzhen as well as Zhuhai.
Yes.
What were your impressions about
the vitality is incredible. The enthusiasm, the vitality, the innovation and creativity, and the willingness to really work hard. It's actually what makes a location very enthusiastically developed. You're looking at talent in terms of people and capital and the right governmental structure, and that's what you see in the Greater Bay Area.
Hong Kong joined 9 cities of Guangdong to form what is called the Grand Bay Area. Right. But do you think the loss of Hong Kong means automatically the gain of other cities in the Chinese mainland?
No, I don't think so. No, I don't think so. I mean, the cities work certainly. There's some competition, but I think most of all, they work in complementary ways. The synergies, between the cities. I mean, there are examples like that in the world. That different cities in a region sort of function differently. They tend to provide some complementarity towards each other. So I think overall, Hong Kong is still. No, we're not going to lose Hong Kong. Come on, I mean, we're not going to lose Hong Kong. Hong Kong is it's going to come back, very strong, and I think it's going to thrive. It's just a temporary setback right now. There's some political turmoil. It will. People in Hong Kong are going to get sick and tired of this kind of non-stop, continuous.
Whatever you say, what happened in Hong Kong should be a wake-up call for not only the SAR government, but for the angry youth who need to be employed to ease their anger about, for example, the limited upward mobility space and the creation of more property to live up to the expectations of the disadvantaged social groups in this territory. But what do you think of the latest move by S&P to lower the expectations for the economic performance of the SAR? The SAR government, for example, Carrie Lam said she didn't agree. She could not accept the results of the rating agency. However, the rating agency of S&P does have its own sets of standards to judge, right?
Well, it's more than that. Anybody who's been to Hong Kong, as I have 3 times in the last month, where tourism is down to 20%.
Probably nothing. No.
Yeah, exactly.
The trains going there all empty.
20% of what it was. 4-star hotel rooms that used to go for 900,000 Hong Kong dollars. You can't get people to come for 200. Retail shops all shut down.
I would love to go there at the lowest price.
Retailing is a disaster as well. Mm-hmm. So you're basically looking at Hong Kong being 3 things. Number 1, real estate. I don't see many buyers rushing to buy in Hong Kong now. Number 2, finance. Financial markets have been really roiled because of the violence that has occurred. And 3rd is tourism and retail. Absolute disaster. So how can you not have a negative view on at least this year's financial performance of Hong Kong?
I agree. I think we shouldn't take sort of a conspiratory interpretation of the rate reduction, S&P rating reduction. I think it has some merits in doing that, and I think what people in Hong Kong should do is just put their acts together and regroup and come back. I think I should put this political unrest behind them and build consensus and work together. Hong Kong has a great future. I think right now the city is essentially hijacked by a very small group of people who are bent on continuing this.
We're not going to be held hostage by the issue of Hong Kong, but let's go back to the normal issues of the economic performance following the release of yet another positive RRR or reserve ratio requirement. Let me go back to Steve King. Hello. Are you okay with the soundbite of me of the Beijing studio, Steve?
Hello.
Hi. We were discussing.
Yes, no, it's okay now. Yeah.
Yeah, we were
it took a while to
discussing
get it worked out, but it's all right now. I
the
can hear
policy
quite
move
clearly.
by the PBOC. What do you think of the expectations that this further RRR by 0.5% will help build confidence? Are you optimistic, Steve?
The policy of reducing the reserve rate is not the right policy because I think they're doing that in the belief that it'll spur more lending, and it doesn't. This is something that I thought the Chinese central bank was aware of. That if you change reserve ratios, it doesn't change at all the amount of lending the banks will do. It can change the asset mix they have, but it doesn't change their capacity to lend. So I think it's actually the wrong policy.
John, what do you think of the timing?
I think timing-wise, it's about time. I think we're seeing some bad news now. The trade figures are coming back. We're seeing not very good numbers. I mean, there are all, as you said, you're pretty much familiar with what's happening on the ground. There are all signs coming back saying that this is not going right. I mean, we are starting to see things slowing down from everywhere. So I think it is.
So you somehow agree with Steve King about the mistakes of the PBOC by releasing this?
No, I don't.
He said PBOC was wrong.
No, I don't think so. I don't think so.
You don't think so?
I don't think so. I think it helps with the banks with their capability to lend. Of course, it's going to happen with the banks with the capability to lend. And
lowers interest rate as well.
I think there's an expectation on the market that the lowering of interest is going to follow. I think it's very likely. You asked the question that are we going to see some interest rate decrease in the following months? And I'm pretty convinced that we're going to see that.
Actually, lowering the reserve ratio in effect will bring about a lowering of interest rate because banks will have more money to lend.
Right.
And in order to lend out more, they may need to lower the interest rate so that they can lend out more. So I think the lowering of interest rate is imminent.
No, I agree, absolutely. I think this one shot is not going to be enough.
No.
Okay, let me go back to Steve.
We haven't got the bottom yet.
I don't want to leave you there idling, but what do you think of our current account? Now, the latest news is that in dollar terms, China's total imports and exports dropped by 2% in the first 8 months of this year. However, the trade surplus has been enlarged by 37% to the dismay of President Trump, totaling nearly $260 billion. So what's your assessment of this, and what do you think of the overall impact of the trade war?
I think it's just a sign that China's economy is slowing down because the imports fell more than the exports did. I think that's probably the main news contained in the current account news. But of course, ultimately, there's no way this is going to reconcile Trump's desire to have a current account balance with China because the American dollar is massively overvalued because it's the reserve currency. And of course, Trump's never going to let that slip. So he's going to be stuck forever in having a trade deficit with China. This trade war will just disrupt supply chains around the world. And the interesting thing is it hasn't actually reduced exports by China as much as China's imports have reduced.
What do you think of, say, the effect of China's depreciation? I mean, the RMB depreciation. The Chinese government was accused of manipulating the currency. Do you agree? And what do you think of the fluctuations of our exchange regime?
Every country on the planet manipulates its currency in various ways. The only ones that can do it in a sustainable sense are those who are running a trade surplus. So the most important thing for China, I think, is to continue maintaining that trade surplus. And but at the same time, a major factor in its advantage, of course, has been the dramatic increase in industrialisation, while American industrialisation has declined, and the same thing is happening in Europe. So in terms of trading blocks, China is ahead of the rest of the world in the same way Japan was back until 1990. So it's the trade war is not being as disruptive as Trump would have liked for China's export program.
Chancellor Angela Merkel has just concluded her visit to the PRC, and she brought with her a business entourage, large in size, in the hope of building up expectations for the economic performance of Germany. What do you think of, say, this the role of German-Franco axis in the wake of a Brexit by the end of October? Do you think Germany will benefit enormously from the current trade disputes between China and the United States, and they're gonna get a lot of orders for the multinationals. They are an enormous part of the business delegation that Angela Merkel brought to China.
That's feasible. I mean, America's main exports to China are at the high end of industrialisation, particularly integrated circuits. And I don't think Germany can actually replace that side of the trade. But machine tools and so on, Germany has a substantial advantage if America is damaging its export trade to China by causing China to put in retaliatory tariffs. So definitely this is giving German industry a large cost advantage, which I'm sure they'll take advantage of. And at the same time, of course, they want to get away from the disruptions that Trump is causing, so it suits them perfectly to have China become more powerful on the global stage.
Thank you so much, Steve. As there is a lot of uncertainty concerning the impact of the Brexit by the end of October, John and Charles, do you think Prime Minister Boris Johnson is likely to seek a rapprochement over the issue of Hong Kong, to reconcile the tone, and hopefully to seek some deals with the PRC?
It's absolutely amazing how more confusing the situation in the UK can become, because what had happened in the last week, for example, calling for disbanding the parliament and shutting it down,
and calling for a snap election.
That is calling for. The situation is more confusing than ever. I wouldn't predict anything as far as the UK is concerned, whether or not it's a hard Brexit or just a hard leave. But the Hong Kong situation is really for the UK's relationship with China, I would call it a storm in a teacup. It's not a major situation.
No, but what about the consensus, if any, at the G7 summit? Did any of the European politicians show any signs of supporting Trump's unilateral moves against China, the trade war to decouple with the Chinese economy? John?
No, I don't think so. I think leaders in Europe realize that they are likely could be the next targets. So they understand that his trade war is not just specifically with respect to China. It's as with anybody who maintains a trade surplus, noticeably with the United States. Now I want to go back to your question about Germany. Germany on the one side probably will pick up some orders because of we're not buying from the United States, but actually Germany also suffers a lot because of the auto exports from U.S. For example, BMW is a very large operation in South Carolina, in Spartanburg, South Carolina. As a matter of fact, the exports of American cars to China, a lot of them actually are BMW cars. So I think this trade war, Germany is not going to just stay outside and entirely be a winner. I think there are also losses to Germany as well. And also regarding the question about currency manipulation, we all know that currency manipulation is a technical interpretation in the United States. It's based on a piece of legislation called the Trade Facilitation and Implementation Act of I think it's 2015, I think. And this piece of legislation requires very specifically that there are three things that have to be met, three-factor analysis, right? So China doesn't meet any, or didn't meet two of these definitions. So I think it requires a one-sided persistent intervention. 3 days of depreciation. It's not persistent intervention. It cannot possibly be persistent intervention. So I think China should not be labeled.
The allegation of currency manipulation was not accepted even by head of IMF.
But that's it.
They laughed at it. I mean, when Steve Mnuchin talked to the IMF officials, I mean, it was being laughed at. It was
very clear in the legislation that the next step to occur is for the Department of Treasury to have consultations with IMF. So we're really, really far away from anything real, I think.
Here is yet another issue that may not be amusing either between the United States and China. Look at what Kudler and Mnuchin said in response to the media about what's going to happen in early October when trade talks, the 13th round, is likely to be resumed. And what the American delegates said that captured the media attention especially was Kudler said we are likely to return to the state of May.
Right.
What did he mean? The state of May? Does it mean, for example, John and Charles, that they're going to accept that there are disputes that cannot be easily solved? Because the Americans gave the strong impression at the very beginning of the trade war that broke out 1.5 years ago that they're going to soon be the winner. They're going to soon take it all. Winners will take it all. So what do you think of the current sentiments of the American delegation?
Well, what he refers to is the situation before allegedly the American side received this cable from China's Ministry of China's negotiation delegation saying that we're going to change a couple of things in this document, especially with respect, according to leaked reports, especially with respect to enforcement mechanism issue.
Monitoring.
Enforcement. It was reported as it's enforcement mechanism, right? Yeah. So, so I think, and then President Trump jumped up and said, they changed everything in the last minute. They called off the deal. Blah blah blah. I think what he really refers to is that some of these issues will be discussed again, and at the time in May, I remember Kudler saying that 90% of the issues have been resolved. There's only 10% issues left.
I thought it's 5% left. But let me go back to Steve. Steve, what do you make of the prospect of resuming the next round of trade talks between Washington and Beijing in early October in the D.C.? Are you optimistic, or do you think it's going to be a marathon negotiation, pretty difficult to have deliverables?
Well, I think everything's been improved in a weird way by Donald Trump because with everything being so volatile with America, everybody else is trying to cooperate. So I expect there may be Trump's unintentional role in international politics is to provide a lubricant for discussions between other countries. So I think the discussions will probably go much better than they would have done without Trump's basically, I hate using the expression bull in a china shop, but that's the expression. His behavior in international trade is making everybody else want to cooperate with everybody else except America.
Is it likely that the Americans are ready to accept the disputes and they're going to negotiate whatever you call it, 10% or 5% left for the structural issues that might be very, very difficult to be solved? What do you think of the immediate future? Steve?
Sorry, the question came through very poorly.
The question is,
sorry.
All
the
signs
question
indicate
came through poorly. I couldn't hear it properly.
Steve, all signs indicate that the Americans started to admit that they won't have a quick victory in the negotiations. It's going to be a long marathon negotiation and no easy victory, no easy winner. Therefore, perhaps the presidency of Donald Trump is likely to be outlived by prospective negotiators instead of the Republicans.
Yeah, I don't think there's no way this can be resolved successfully, because the starting position is Trump wanting to have balanced trade with everybody in the world, while America's currency is overvalued because it's the reserve currency. So there's absolutely no resolution to this. I think expecting a resolution and an end to this disruption is foolish, given Trump's personality. You won't get a resolution of this until he is no longer in the White House, and that could be 6 years away.
Thank you so much, Steve, for being with us. Very quickly, a last question for each of you before we wrap up the discussion in the studio. Charles, among all the 6 assurances that President Xi Jinping overwhelmingly emphasized for stabilizing the economy, 6稳, I mean, 稳就业, stabilization of the job market, first and foremost, comes across the top issue on the agenda. However, it first of all raised the prospect of having to put the GDP growth rate above or at 6%. Is that a realistic goal? Unless and until 6% could guarantee no enough university graduates will find their jobs.
Well, no matter what people may wish, China's economy is tied to the rest of the world. When EU is looking at less than 1% this year, and Germany looking at recession coming up in the next quarter, and US dropped from 3+% to 2% and projected at 1.5 to 1.7% next year, you're impacted. There's no question. Even if you are focused more and more increasingly on the domestic market. So there's no way you can avoid this global impact with the global supply chain and international trade. So I think 6% will be nice, but it's going to be difficult to maintain.
Back in the year 2008, former Chinese leadership vowed to keep the GDP growth rate at 8%, so that there won't be massive losses of jobs. That's for political sake to maintain stability. Do you think
these days are gone? We are getting into the territory of like a developed country in the where 3%, 4% is a very good year. But ask me the question, 6% we're going to reach that? Well, first of half of the year we get 6.3%, right? So in the second half, if we get 5.7%, we should be meeting 6%. Yeah, averaging, simple mathematics is 6%. So I think there might still some hope. But as you said, even if we didn't get that, something close to 6% is already a phenomenal job in today's environment.
All right, thank you so much, Charles and John, and also our guest speaker in Amsterdam, Steve, for your nice discussion about the Chinese economy after the release of PBOC's reserve ratio requirement by 0.5%. I'll see you next time. Goodbye.